Recently in Davos, Mexico's economic overhaul received plaudits, while Brazil was mentioned on the hot list for all the wrong reasons. But with such geographical and cultural similarities, what is setting these two economies apart? Joining me down the line to discuss is Joao de Castro Neves. Joao, as host of the 2014 World Cup, followed, however, by an autumn election, Brazil will certainly be in the limelight this year. The country's markets are still waiting for the 2014 fiscal target. A firm target and a detailed plan to achieve it could take pressure off the currency and interest rate futures, though markets are currently sceptical that they will get either. Is there room for optimism for Brazil?
Well, I think that definitely there are reasons for the pessimism towards Brazil of late, but we can't also exaggerate this pessimism, because of course if you compare Brazil with other emerging markets, there may be some dark clouds coalescing in the horizon when it comes to the quality of macroeconomic management, etc. But I do think that beneath the haze, beneath the chatter, you do have more consistent pillars, I think, when it comes to, the country's reserves, a huge domestic market, etc. So I think that, I wouldn't say that there's great room for optimism in the near term, given the fact that, there are other factors like monetary policy in the U.S., an upcoming election in Brazil that may create volatility. But in the longer term, I think that Brazil may fare rather well. I think the not so favorable winds of the global economy.
The country's finance minister used to boast that his country's model of economic development would soon spread throughout the world. Concern has been linked to the fact that too much growth has come from consumption, and Brazil, with its high taxes, red tape and tariffs, did little to prepare for the day when commodity prices might weaken. Is this the crux of the problem, do you think?
Yes, I think that's one of the main problems, the fact that, you've had the country like Brazil benefiting immensely over the past several years from Chinese growth and the commodities boom, and now that you're facing a not-so-favorable situation, the question is, has that growth model been exhausted, right? So I think that that's the key of the problem, and I think that the government is slowly realizing this, the Brazilian government is slowly realizing this, that they need to change the model, or at least adapt it to a new situation. And one thing that they're doing, even though you may say that slower than should be, is that they're trying to boost investments, right? They're trying to kind of shift away from this consumption-led model and increase investments. And to do that, they're attracting private and foreign investments to infrastructure, transport infrastructure concessions. This is definitely a step in the right direction. So now the question is, is it fast enough or not? And I think that because of what I said before, that we're heading into an election year, a lot of these constructive overtures may be slower than they should be.
By way of a comparison, Joao, what do you think of the latest MINT acronym, with the suggestion that Mexico, India, Nigeria and Turkey are on the ascent, with Mexico as the leader? Are the BRICS old news?
No, I always like to take these acronyms with a grain of salt. I think that they're catchy, and I think that they may make some sense for markets, trying to identify interesting, promising investment opportunities. But it's artificial, right? It's an artificial acronym. I think the BRICS, there was too much hype surrounding them when they were created, and now there's also too much hype, basically calling for the demise of the BRICS. I think that at the end you do have a number, a dozen or so of large emerging markets that they may have bad years and good years, but I think that that's definitely those are the countries to watch over the next several years, right? And not kind of have a narrow view of a catchy acronym.
And just lastly, Joao, thinking about the Chinese slowdown and given the recent EM sell-offs, what are your outlooks for the Brazilian real and Mexican peso? What are the contagion risks for EM to LATAMs?
The risk always exists, right? Because especially from if someone that doesn't know exactly the difference between one country and the other, for example, what's happening now with Argentina as well as Venezuela, that this may generate some noise, some concern regarding Latin America as a whole, right? But I think that now it's a different situation than years past. I think much of this has to do with monetary policy in the U.S., I think, and less to do with policies of some of these countries, right? So I think that we'll start seeing a lot of these countries like Brazil, Mexico, and Venezuela, Argentina, other EMs kind of diverging a bit in the way that they respond to this more challenging economic environment. And now, of course, for a country like Brazil, I think that even though we're heading into some choppy waters when it comes to the economy over the next couple of years, I do think that the country does have some buffers to sustain any kind of more sharp volatility going forward. And by buffers, I mean foreign reserves, relevant size of foreign reserves, an economy that despite slow growth, it's still growing. So I think that that's something to keep in mind.
Joao, thank you so much. Well, that's all from Joao and myself for the moment, but for more currency outlooks, why not click back to the site for today's forecast programme with Ben Jones. Goodbye for now.